January 15th, 2026, President Trump nominates Kevin Warsh as Federal Reserve Chairman. January 17th, Senate confirms Warsh in record time, fastest confirmation in Fed history. January 18th, silver begins a catastrophic collapse. 3 days, one appointment, 35% of your wealth, gone. Coincidence? Or was Kevin Warsh's real job to destroy your silver position before it exposed the biggest lie in American finance? ACT1, the timeline that doesn't add up, the 0:45 to 3:30. Let's start with what they want you to believe. Kevin Warsh, former Fed governor, Goldman Sachs pedigree, Wall Street insider, gets nominated because he's a sound money hawk who'll fight inflation and strengthen the dollar. That's the official story. Now let me show you what actually happened. December 2025, silver breaks $80 per ounce. Industrial buyers panic. Tech companies, Apple, Tesla, Samsung, are hemorrhaging cash because they need silver for everything from iPhones to solar panels to electric vehicles. Their profit margins are getting crushed, and silver's heading to $100, then maybe $120. At those levels, entire business models collapse. January 3rd, silver hits 97. The COMEX, that's the exchange where silver futures trade, starts seeing delivery notices. Physical delivery. That means people want the actual metal, not just paper contracts. This is a nightmare scenario for the exchanges and the banks. Why? Because there's about 100 times more paper silver traded than physical silver exists. The whole system is built on a lie, and that lie was about to be exposed. January 10th. Behind closed doors, Trump meets with Treasury Secretary and Fed officials. 5 days later, Kevin Warsh gets nominated. January 17th, Senate confirms Warsh in 48 hours. No extended hearings, no real opposition, just fast-tracked. Now here's where it gets interesting. January 18th, the same day Warsh is confirmed, the CME Group, that's the company that runs the COMEX, announces the first of 5 margin hikes in 9 days. Margin hikes force traders to put up more cash to hold their positions. And when you can't meet the margin call, you get liquidated, forced to sell. Within 72 hours, silver crashes from 97 to 63, 35% obliterated. You think that timeline is random? Let me tell you who Kevin Warsh really is. This isn't some free market champion. This is a man with one job: protect the system at all costs. Warsh started at Goldman Sachs, the same Goldman Sachs that paid $920 million in fines for rigging the silver market. He then joined the Fed during the 2008 financial crisis. Visual 2008 crisis montage. And what did he do? He helped engineer the bailouts. He helped print trillions to save the banks while your home value collapsed. Now he's back, and his mission isn't to save you, it's to save the illusion of a strong dollar. Here's what you need to understand. The US dollar is dying. Not today, not tomorrow, but the trajectory is clear. 40 trillion in debt, trillion-dollar deficits, endless money printing. The only thing holding the dollar together is global confidence. And you know what destroys confidence? When commodities, especially monetary commodities like silver and gold, start exploding in dollar terms. Because when silver goes from $20 to $100 in a few years, what's that really saying? It's saying the dollar lost 80% of its purchasing power. Silver at $120 doesn't mean silver got more valuable. It means the dollar got weaker, and the Fed cannot allow the market to send that signal before the 2026 midterm elections. So they deployed Kevin Warsh. His real job? Nuke the commodities markets. Suppress gold, destroy silver, make it look like inflation is under control. How do you fake low inflation numbers? You artificially suppress the prices of things people actually need: energy, food, metals. And here's the beautiful part. For them, when they crash silver, they get to say, see, no inflation, commodities are falling, the economy is stable. It's a lie. It's a coordinated lie. And Warsh is the man executing it. Every Fed chair is a wealth extractor. Warsh is just more honest about it. Now let's talk about how they did this, because this wasn't just the Fed acting alone. This was a coordinated military-style operation across multiple institutions. Visual, network diagram connecting Fed, CME, Treasury, major banks. The playbook goes like this. Step 1. Warsh gets nominated. This sends a signal to every major bank, every hedge fund, every institutional trader. Short silver, we've got your back. Step 2. Warsh gets confirmed in record time. That's the green light. The attack can begin. Visual military green light signal. Step 3. The CME drops the hammer. 5 margin hikes in 9 days. Retail traders, you, get liquidated because you can't meet the new requirements. Step 4. The banks and hedge funds who knew this was coming, they're on the other side of your trade. They're buying your silver at $63 after you were forced to sell at a massive loss. It's the oldest game on Wall Street. Crash the price, force out the weak hands, accumulate at the bottom. But here's what makes this different. This wasn't just market manipulation. This was government-sanctioned market manipulation. Let me ask you something. Why did the Senate confirm Warsh in 48 hours when Supreme Court justices take months? Why did the CME, a supposedly independent exchange, just happen to raise margins the exact same day Warsh was confirmed? Why did no major financial media question this timeline? Because they're all reading from the same script. Trump gave you a tax cut with one hand and robbed your silver with the other. And before you think this is partisan, this isn't about Trump versus Biden. This is about the system versus you. Both parties protect the Fed. Both parties protect the banks. Both parties need you to believe the dollar is strong. And anyone who threatens that narrative, whether it's silver investors, Bitcoin holders, or anyone trying to preserve wealth outside the system, becomes a target. Now here's the nuclear question nobody in the mainstream financial media will ask. What if Warsh's appointment was the signal for insiders to short silver? Think about it. If you were a hedge fund manager with connections to the Fed and you got word that Warsh was about to be nominated and confirmed, wouldn't you position yourself accordingly? Let me show you something interesting. This is the QOT report, Commitments of Traders. It shows positioning in the futures market. Look at the week before Warsh was nominated. Commercial traders, the big banks, increased their short positions by 37% in 1 week, the largest 1-week increase in 6 months. They knew, and they positioned accordingly. This is what's called front-running. In normal markets, it's illegal. But when the Fed is involved, it's just Tuesday. No investigations, no enforcement, no consequences. Because this is financial warfare against savers. And in war, the rules don't apply. Your 401k, collateral damage, your silver stack, enemy position to be neutralized, your attempt to preserve purchasing power, a threat to national security. Warsh wasn't hired to save the economy. He was hired to save the illusion of a strong dollar. And if that means sacrificing your wealth, that's a price the system is willing to pay. So where does this leave us? Silver's had a relief rally, back to $87. Some people think the worst is over. I think this is a trap. They need you to buy back in at $87. They need more retail liquidity to absorb, because the next leg down to $60, maybe $50, that's where the real accumulation happens. Visual, projected price targets downward. And then, when the 2026 midterms are over, when the political pressure is off, when they've successfully suppressed the inflation narrative, then they let silver run. Back to $120, $150, maybe higher. But by then, you won't be holding it. You'll have been shaken out at $60. You'll have capitulated. You'll have believed the narrative that silver is dead. And the same banks that destroyed your position will be sitting on massive long positions accumulated at the bottom. That's how this game works. That's how it's always worked. So what do? That's not for me to say. This isn't financial advice. I'm not telling you to buy, sell, or hold anything. What I am telling you is this. Kevin Warsh's appointment wasn't random. The timing wasn't coincidental. And the crash wasn't organic. This was a coordinated operation to protect the dollar, suppress inflation optics, and transfer wealth from retail investors to institutional players. You were the target, and Warsh was the weapon. The question is, are you going to let them win? Think for yourself. Question everything. Protect your wealth. If this video challenged what you thought you knew, share it. If it made you angry, good, that means you're paying attention. And if you think I'm crazy, check the timeline yourself. Look at the COT data. Follow the money. Then tell me I'm wrong.